We hope you find this information useful, and if you have any questions regarding the content of this presentation, please do not hesitate to inquire with your relationship manager or by sending us an email. Please be aware that this presentation does not constitute any form of investment advice and is only reflective of information that is available to the presenter at the time the presentation is being made. The material presented is just for information use only. Please speak to your advisor prior to making any investment decisions.
Again, welcome everybody. My name is Ralph Desando, Managing Director of Private Investments at Yorkville. Tonight's presentation, as I mentioned, is aptly called 2021 Update for Q1, Seeing the Light at the End of the Tunnel. Thanks again for your time, and I'm really looking forward to giving you this update. So for those of you that are new to this fund or to this type of presentation, just to get a bit of background on what Yorkville has done with the Yorkville Long-Term Healthcare Fund. We launched it in November of 2012 as a yield-based investment vehicle with some opportunity for capital appreciation. It's hard to believe it's been since 2012, but since that time, we've grown to $203 million of market value, built the 5th largest elderly care provider in Canada with resident capacity of 3,400, with more under construction. Built the single largest institutional pharmacy in Canada, serving over 90,000 residents. Obviously, there's a lot of pride in what we do. I was talking to some investors and some advisors this week and said, you invest in this fund, you invest in what we believe in, because we build businesses, and you can see in what our accomplishments have been that we do in fact do that. So 2020 has been a record year, one of the most difficult years, and 2021 has continued in that same vein, that with such success. As I mentioned, after a record 2020 with 40.25 million of net new equity, 2021 has gotten off to an even faster start with 24.6 million of new equity versus 17.5 million in the same period last year. Investors, advisors, institutions are really starting to see what we're accomplishing and are really starting to become partners with us in that. The fund has exceeded 200 million, which is quite an amazing milestone, while still navigating a challenging environment through COVID. One of the biggest accomplishments, well, not just the biggest, but one of our large accomplishments at Yorkville is enhancing the governance and obviously being part of the investee companies through direct board participation. We've continued to negotiate fee reductions. We create income at the subsidiary levels to offset distribution costs at the healthcare fund level, and signed a definitive agreement to internalize the Southbridge management contracts. We've expanded, as you know, into different investment silos that included secured debt to further mitigate risk. And last but not least, we funded the equity needed to redevelop 5 long-term care facilities, leading the charge to become part of the solution. And we do say that we are really, and believe that we are becoming part of the solution in Canadian healthcare by focusing on the quality of elderly care through redevelopment and committing the equity needed to move forward both current and future projects. How has the healthcare fund performed? As you can see, year to date, over 5% return, and since inception, almost 9.5% net of fees. In comparison, the CAPREIT index has done 6.5% before fees. So again, we continue to perform and outperform the CAPREIT index net of fees. As I mentioned, this is, and I have said this in the past, this is an actively managed fund. Yorkville is an active manager looking for these acquisitions, looking for businesses to build, and continuing to work alongside the boards of our investee companies to provide value to both the businesses and to our investors. As I mentioned previously, we participated in a $13 million secured debt in 2020, and 2021 has been even more active. Being part of a $10 million bought deal where we participated in 5.1 million at 425 for CareRx. In April of 2021, a transformative acquisition by CareRx, purchasing the long-term care pharmacy division of medical pharmacies for somewhere around 75 million. The company did a $55 million financing, and in addition to that, we participated with $11.5 million in equity at $5.05 a share. We took the over allotment of 15%, given that the book was oversubscribed over 2 times. To give you a sense of the value that we're able to provide for our investors, the morning that this deal was announced, the book runners had over $110 million of equity that had been committed, and only 55 million of which could be taken up. By virtue of our rights as shareholders, we were able to participate in 11.5 million, providing our investors with value that wasn't out in the marketplace. Today, that share price is over $6. In addition, to help facilitate further yield and future yield, we added $6 million of secured debt, consolidating our previous $14 million of debt in a 5-year 10.5% interest. The strength of the company is such that they are now paying that, which will help again secure the yield for years to come. On the Southbridge side, again, just as active. November funding 28 million, January another 6.6 million, 4.1 million in March, and April and May, we're very pleased to say that we added another $9 million of LP units to finance further redevelopment of these Class C facilities. The importance of this is in conjunction with negotiations of the board, we were able to reduce the Southbridge fee from 1% to 0 in these new 4A units. Again, this will assist with leaving more yield or more income in the business to allow for future growth and obviously further value in the future for our investors. The Yorkville Healthcare Fund, as many of you are aware, have a revolving bridge equity line with Scotiabank. Scotia has and Yorkville has successfully renewed this line of credit for $30 million. The importance of this is that the bank did a significant amount of due diligence on the business risks and satisfied themselves that the business model of the fund is such that they were able to advance that type of facility. We're very, very pleased with that confidence that the bank has shown, and will allow the business to continue to grow at the pace of our committed equity. So again, I'm just going to summarize why would you invest in long-term care? Extremely fragmented market. You could see that our investee company Southbridge at 3,100 represents 4% of the market. If you look at this across Canada, it's even worse, where it represents only 2%. So we continue to believe that there is growth capacity in this market, although at this time we continue to focus on redevelopment. While I mentioned at the beginning of the presentation that we see the light at the end of the tunnel, it really is shown in this. Q1 revenues and operating expenses, you'll notice that the Q1 revenue, same period last year, is up over 50%, and same with the expenses. That was to fight wave 2, but it really illustrates and highlights the importance that the ministry is placing on the operators of long-term care and the commitment to their funding model and protecting the industry. We're very pleased with this commitment by the ministry, and we will continue to work with them in partnership to improve elderly care. Management does expect, though, that with wave 2 gone, vaccinations in the home, revenue and expenses will normalize more in line with Q2, Q3, and Q4, and attaining budgeted AFFO for the year, thus not affecting NAV values. But you can clearly see that the management team at Southbridge, I do applaud them, and that they have worked hard to make sure that we're doing a good job to protect elderly residents in our portfolio. So I want to talk a little bit about the institutional pharmacy space. Again, just as the elderly care portfolio and long-term care, the market itself is extremely fragmented. You could see that we started with Centric Health at 31.5, 31,500 beds. We then purchased Remedies RX, purchased Smart Meds, which was 2,400 beds, medical pharmacies at 35,000, and then just recently purchasing 4,200 beds of Rexall to create a business that is going to service over 90,000 beds. We're very, very proud of this accomplishment, having done this in almost less than 2 years, capitalizing the balance sheet, streamlining operations, a committed board, a very good management team. I again applaud them and applaud the board. And we look forward to seeing the operational efficiencies coming out of this. And we're excited for the future of this. In terms of financial highlights for CareRx in Q1, you can see that revenue was up 47%, but more importantly, adjusted EBITDA resulting from the acquisition of Remedies was up 100%, with margins improving as well. So we'll continue to see that. Smart Meds, the win of a large contract, and Rexall and MPGL will certainly improve the operations of this entity. Construction and redevelopment is one of the most important activities going on at Southbridge, where it's accelerated by virtue of the Ford government's actions. All 4 projects are scheduled for completion summer 2022, which will expand our portfolio in Owen Sound and Kemptville and Cornwall. They continue to be forecasted on budget. I'm pleased to say, and I might have said this in the past, that Port Hope and Orchard Villa have all been added licenses, but even as recently as March of this year, we've added another 291 new licenses in Port Perry, Goderich, and Chelsea Park. I've said this in the past that the portfolio will not look anything like it does in 2 to 3 years, and we're pretty excited for that. You can see that construction is moving rapidly with Owen Sound. Actually, I was just talking to Ryan today, and he said they're actually laying out the internal rooms of the facility, which is pretty cool to see, considering it started somewhere in November, December of last year. Same with Kemptville. They're moving that along quickly. Cornwall, similar, and you can see all the designs are very similar, and to maintain cost efficiencies and really operation efficiencies as well. And last but not least, London. I drove by this. This is a pretty nice site in the middle of a residential neighborhood, great location, and it's pretty cool to see our growth in the London area. Private equity, our private equity fund, which is part of the Yorkville Healthcare Fund, has delivered astounding returns. We're quite pleased and proud of this. In 1 month after the announcement of the acquisition of MPGL, it delivered over 11% return and a year-to-date return of 35%. Again, we build businesses, and this is the result of building a business. We looked for value, and we've been able to create that value. This return does flow into the healthcare fund as well, so that's why the performance of the fund has been as it is. So where do we go from here? I mean, we just this month have deployed about $21 million of cash. We have about 19 million on our line, still room if we want. We continue to raise equity, and we will continue to commit to the redevelopment process and the equity needed for that. In terms of the ancillary healthcare silos, we're looking at other options, food services being one of them as a potential opportunity. So again, we continue to remain very active in managing this fund, very active in looking for opportunities, and very active in working with the investee companies to see where Yorkville can help deliver value. Again, this is the structure. You can see that each flows into the Yorkville Long-Term Healthcare Fund to allow for that return of capital and deferred distribution return for tax. That's the end of my presentation tonight. I hope you all enjoyed it. I hope you got a sense of what we're accomplishing at Yorkville on behalf of residents and on behalf of our investors. Again, we are committed to making a valuable difference to Canadian healthcare, and we do appreciate that you have been our partner in all of this. So again, thank you so much.